Right, ladies and gentlemen, the next item on our agenda, I'd like to call upon Louis. Had already picked on you earlier, so I'd like you to please join me again on stage with the Chief Audit Executive of Transnet, Ms. Matabo Sukati, and the Audit Committee Chairman, Ms. Yake Pinana. The three panelists are going to assist us as we unpack the key features of an effective risk management function. And I think, Yake, can you please join us on stage as well? So we'll get some perspective around this. I mean, over time, we've seen the risk management function, or even the whole concept mature and evolve over the years. And like we said earlier, concepts like the combined assurance, we certainly believe that with time we're going to improve on them. And with risk management, Louis, you've been in the financial sector for some time now, and this is one area in our country where it's believed has been under quite tight risk management, and that is why we were able to waiver some of the financial crisis globally. And Matabo, Transnet is known to have one of the largest outsourced internal audit functions as well, and how you underpin the enterprise risk management around that. And Yake, more from your experience being an audit committee chair, how you've seen effective risk management functions. So I'd like to start with Louis, who will give us, you've been allocated 15 minutes, Louis, for your initial presentation, which has been loaded. Thank you.
Okay, thanks again. I think the discussion this afternoon, I think one should see whether you have a separate audit and risk committee or whether there's a joint committee doesn't really matter. I think the topics that we wish to cover would be applicable to both approaches. I think the first point that I just wish to highlight is that obviously events over the last couple of years have surely assisted us to move the responsibilities of risk management quite substantially up in the banking order. But we don't underestimate the journey that we still are on, and also the importance and challenges that one might have to justify when it comes to investment in risk management, technology, systems, etc., because to a large extent we are managing an unknown and trying to prevent the unknown that makes it rather difficult at the end of the day to always put a rand value to the benefit of your risk management efforts. I think then the question obviously is still asked as to why would one then still have that debate. And I think it is possibly still an issue that we might be confronted by the fact that one always tends to think that the activity or the risk might be somewhere else. Either it's the stereotype of too big to fail, too good possibly to fail, and on the other hand also possibly a case of our business being too small or not relevant to our industry as some of those stereotypes. On the other hand also, I think the debate is ongoing
because, as I said before, I think risk officials in certain instances still find it rather difficult to convince sizable investments into risk management tools to support the approach that needs to be followed. However, I think it is important that we again look at, if we have a risk management function and if we assess where we are as an organization, to look at certain criteria, certain activities to determine how well and how far have we progressed on this route of embedding risk management within the organization. And I put the emphasis on embedding because I think, as in many other instances of our business, quite easily executive management can fall into the trap of the approval of a plan and the implementation to be delegated to lower authorities, and some of the good of a plan can easily fall by the wayside if oversight and monitoring is not there, and if the necessary accountability don't reside within that executive management. So certain aspects that I think is important that one should assess: where are we as an organization with risk management as a whole within the organization? Is the existence of a risk management plan? And I almost want to put the challenge to say, is a risk management plan as alive and as rigorous a document in your organization, whether it's public sector or private, to the same extent as what an audit plan will be in the organization? Is the plan translated in a manner that there are adequate policies in place that supports the creation of the climate in the organization of being clear of the rules of the game? Thirdly, is there an adequate and sufficient risk measurement tool in place that will assist in measuring and monitoring activities, trends, analysis, etc., and more importantly, an early detection tool of things possibly not going according to plan? Again, as we assess how far we are on the journey of risk management, is to say how mature is the three-way play of risk within an organization. And in the three-way play, I refer to business as one level, risk and compliance as another, and audit as the third. What is the level of interaction, engagement, and a joined-up approach to managing the culture and the climate in the organization to conducive control standards? And then lastly, what is the quality of our reporting? And is the risk reporting done with the same discipline and the same rigor as will be applicable to other financial reports within the organization? And then the last point that I would like to refer to in assessing how far are we on the journey is the quality of our governance structures within our organization. Now, again, the debate today on a number of occasions was public sector, too big for my organization, should I have all these governance structures and the cost that goes with it? I think one easily run into the same debate on risk to say, is this relevant to my business? And I just thought in dotting down a few aspects and say, if any of that has a yes answer in your business, surely a form of risk management structure should be in place. And if your business is exposed to international markets, if there are financial instruments that you apply in how you compile your balance sheet, how you fund yourself, trading in commodities, is the consumer part of your clientele? Are you exposed to fraud, certain regulatory issues of treating customers fairly? If any of those activities is applicable to your business, rest assured that risk is slap bang in your business and you should ensure that a form of risk governance applicable to the size of your business is indeed in place. If I look at, and again I refer to an audit and a risk committee as one, which is absolutely fine, or a separate audit and risk committee, and then more specifically then the risk agenda, what would I consider should be on the agenda of that risk committee as aspects of risks that the committee will have a regular oversight of? I think first and foremost is to look at balance sheet risk. And if I speak about the balance sheet risk to a large extent, how strong is the balance sheet for what level of shocks to be absorbed? And I think that's something that the risk committee should have its hands around quite solidly to understand the strength of the business in difficult conditions. If I refer to the structure of the balance sheet, again, I think the risk committee should really apply their mind as to the makeup and composition of that balance sheet, as they would have to think about what instruments, financial instruments to be exposed to, what is the size of equity risk that you would take, what would be the investment risk, all playing into the health and well-being of the balance sheet. The second aspect that I think the risk committee should have on its agenda is that of market risk. And I accept that there's a fine line between some of the items I refer to on balance sheet risk that might fall into the category of market risk. And I also don't only want to limit market risk to FX movements or interest rates, but I also would like to challenge a risk committee, if we think about market risk, to think about the external environment within which we operate as a business. I think Linda in our early morning discussion referred to a tick box exercise, and that's exactly what we must prevent and not allow to happen at a risk committee level. It is not thinking about what is on the risk scorecard in terms of the completeness thereof, but the reality of the environment in which we do our business and whether we are forward thinking enough in that regard. Many of the market research that's done under C-suite execs would refer to regulatory risk as being one of the key risks of the business. And indeed it is, with fast changing legislation. But I guess as companies also think about, or entities think about business outside of South Africa, one run into different standards applicable by different regulators. How do you comply to both? I think we face changes to codes and charters. Just now, again, on BEE, quite a lot of debate and discussions within the media, and every second day one is confronted by changes that plays into the rights of your customers or those that do business with you. I think the fourth area that I say that should be on the agenda of the risk committee or be covered in the risk discussion is one of financial risk. And possibly it's the one area then that immediately bring the question to the fore in terms of the overlap between a risk committee and an audit committee. And I really want to call, and I'm chairing the risk committee of Telkom, that I think at a committee level, the chairpersons of the different committees should really just kill that debate off very soon, because it's more an excuse than anything of a reality. I think there's very clear lines as to where responsibility starts and ends, and that there shouldn't be any fear of duplication. Quite often the audit committee can get into the detail of the financials, understanding variances, understanding trends, looking at forecasts, etc. On the risk side of the financial risk discussion, I would refer to the risk of non-performance and the impact on stakeholders, the impact that it can have on potential investors, and also making sure that the pressure on realizing financial goals and objectives possibly don't overrun and prevent certain key investments that we need to make, i.e. holding back on infrastructure investment to bolster financial performance. And if there's a sound interaction between audit and risk in that regard, I think it actually bodes well for the business going forward. The operational risk that the Risk Committee should have on its agenda covers a wide range of activities, but just in terms of the theme and the climate of discussions, if one think about our products and services, is it still relevant? Is it still in line with our customer needs and wants? Is it still in line with the latest technology? And is it a basis for growth going forward? Technology forms the backbone of many activities, forms the backbone of the integrity of our financial information. How solid is our systems? How secure is our systems? People as a key asset, succession, skills, retention. Now, my issue here is that there are many other committees that looks into the detail of some of these activities, whether it's HR, whether it's social and ethics. But I believe the Risk Committee should hold the mirror to the board to say how good or bad are we in managing a particular risk within the organization. Strategic risk, extremely important. And as I said earlier on, quite often a lot of time and energy into the composition of a plan and not as much attention to the implementation thereof. And are we comfortable that your board is constantly confronted by an adequate and a good scorecard on the strategy of the organization and the entity, on how well we are doing, how well we are tracking to the plan, how well are we doing on reassessing our plans, because in the current environment, strategy is not revised annually. It should actually be assessed quarterly and possibly revised 6 monthly, given the fast-changing external environment. And then the last 3 areas that I would like to just refer to what should be on the agenda of the Risk Committee. I would speak to reputational risk, the sustainability risk, as well as the environmental risk. And I understand the early stages of that in our organization. In closing then, if we today should assess our business and determine how well and effective have we embedded a risk management function, I would imagine that some of the following will have a green rating on your robot, and that will be an alive and rigorous risk management plan, clear governance structures at all levels of the business, and also a healthy working relationship between the governance structures of audit and social and ethics. Within the organization, irrespective, private or public, how far advanced are you in determining the risk appetite of the organization? How clearly has limits been set? And how well are we at tracking how we are performing within that risk appetite? There's the reference to scorecards. I referred to assessing our business in terms of global events. How well are we doing on stress testing and conformance testing to constantly check as to whether we are able to absorb certain shocks within the broader risk appetite? Is the organization working together on a risk-reward strategy? And furthermore, how well have policies been embedded within the organization? I think those that are on the slides are some of the items that I would promote that you use in assessing how well are you doing at risk management and how well has that been embedded in the organization.